We are today on Behind the Markets, and to everyone who's with us, we are praying you're having a wonderful day, and may all be with you today. Now, let's get down and a good morning to you, Stephanie. How are you doing today? Okay, unfortunately, our online audience is unable to hear you at the moment. But unfortunately, that means that we will have to get going and get into today's show, which is Enterprise Thursday. So for late today, we did have a little bit of a technical mismatch, but now let's get down to it. Let's get into our market roundup today. The first thing we touch into in our market roundup is that we've seen the Kwacha getting a bit weaker, down to 20.8143. Continuing 0.42% down. As it's on the week, the Kwacha is still stronger by 0.26%, but up the dollar's up 6.53% on the month and 15.02% year to date. While it's still on a bull run, there is a little bit of a sell signal that's starting to creep in. Now, we are also getting that yesterday we did have a strong day with the so we did have a strong day with the all-share index, with both Puma Energy and CEC moving to a new all-time high of 6.5 kwacha, while Puma Energy also moved up by about 0.6, by about 6 and where yesterday, also pushing it up as they both had the strongest bull run. The three strongest runs in the market this year has been CEC, Puma Energy, and Airtel Zambia. That's been some of the major movements this week. But we have seen the stock market yesterday was up 0.8%, while the all-share index was up. It was up 0.85% on the 7 days and up 25.86% year to date. We did see that the bond index was up 0.06%, while the USD index was up 0.03%, and interest rates moved up by about 0.0015%. Now, we do see that in Rand, we also saw that the Rand has pushed up to about 1.1, about 1 kwacha 10 ngwe, up 1.31% yesterday and up 3.76% year to date and up 0.44% on the week with some momentum building up on the Rand. We are starting to see continuous weakness in our currency on both against the Rand and also against the United States dollar. Now, GRZ bond index yesterday also did move up by 0.06%, but down by 0.3% in dollars, while interest rates also slightly shifted upwards, signaling signs that we're still in a bit of a selling patch when it comes to bonds, even on the secondary market. Now, commodities markets, and this is also giving a signal, by the way, to the up-and-coming auction that's coming next week, that there's still less of a chance of interest rates dropping. Now, I don't see interest rates rising, mainly because we don't see the government accepting higher interest rates. They would rather cut costs at this moment, but we don't see the market accepting lower interest rates at the moment. Sorry, Stephanie, I think we're still getting that interference sound that my audience may be dealing with. So in this regard, we do see that the bond market is actually still signaling elevated interest rates that will still be around for a little bit longer. So higher for longer interest rates will still continue. Copper did move up yesterday by 0.44%, up 9.49% on the year, but still down 0.32% year to date. While oil just dropped a little bit below 94, as it's been trading very close to 94, 95, but it's now dropped slightly below 94 by 0.58%. Still up 13% on the month. So that might be a bit of tough work looking at us going forward. Gold was up 0.54% in dollars, up 7.51% year to date. Now, the pump price we're still recognizing, and this is about the time when we start to see ERB calculations being done. We are looking at about the pump price should be looking somewhere around 32.88 kwacha, 32 kwacha 88 ngwe is the expected pump price that we're seeing, or at least an 11.76% movement upwards. The expected pump price is probably going to change about 3.4 3 kwacha 42, 46 ngwe, mainly due to an even split between the US dollar and the Brent crude price. So these are the two main factors driving the movement of the oil price expected at the pump. So do expect by the end of this month another 11% or 12% movement in your pump price. We haven't even taken supply chain costs into consideration. Now, wealth insurance assets, we did see that Bitcoin was up 0.3% yesterday. And also Ethereum was up it was down 0.5%, while gold was up 0.96% in kwacha. So across the markets, we are seeing that bonds are still up 19.7%, stocks are up 25.9%, USD is up 15%, gold's up 23.7. We're still in a defensive position with some slight aggression coming in through the stock market. Now, Bitcoin is up 88.3% year to date, and Ethereum is up 56.2%. But remember, these are highly volatile assets. So you want to make sure that you also balance. Remember, we talked about risk yesterday. We've been talking about risk going forward, and we want to make sure that you're always taking into consideration that you must balance portfolios for risk, not for return. It's very dangerous to balance them for return. You want to balance them for risk while still optimizing return. Now, if you're looking at the quarterly analysis of the stock market, this quarter to date analysis, we are seeing that the bonds are up 5.6% this quarter so far, heading towards the end of this quarter. So the bond market would have performed slightly less than the second quarter. So the third quarter bond market performance may not be as strong as the second quarter, but we have seen the stock market has performed very strong, 12.1% up, and this also trounced its performance in the previous quarter, while the USD is up 18.3%, reversing all of its losses from the previous quarter. It lost 17.5% in the previous quarter, but it's gained 18.3%. Gold also has reversed all of its losses from the previous quarter, up 20.5% versus its losses of 19.2%. While Bitcoin is still in a net loss position with 11.4% lost in the last quarter and only 5.2% gained in this quarter. And Ethereum is up 0.4% in this quarter down. So we are seeing that these rather volatile assets do not have a net gain. You can see compounding gains happening in the stock market and in the bond market, while all of these are working in very volatile swings, trying to reverse what has happened in the previous quarter. And finally, with the four horsemen that we did read out today, we did see that British inflation dropped to 6.2%, 11-month low, while British PPIs also dropped by 1.6%. These are core inflation figures in Britain, while headline inflation dropped to 6.7%. German PPIs are going deeper into the negative, down 12.6%, showing that our supply chains are still pushing prices down. U.S. crude inventories withdrew yesterday. Sorry, Stephanie, we're still getting that sound in the background. U.S. crude inventories, unfortunately, drew in yesterday, saw a drawdown yesterday, which is pushing potential prices of oil upwards going to the future, as we're seeing cuts from Saudi Arabia and still U.S. having heavy drawdowns. South African inflation was up 4.8%. So we might also continuously start seeing rate hikes happening in South Africa until we get inflation down to a tolerable level. South African retail sales were down 1.8% as of yesterday. And we also saw, Stephanie, that we also saw mortgage rates, 30-year mortgage rates in America also rise, signaling higher interest rates will continue higher for longer. And we're also seeing that European construction production did finally drift into the positive. British housing prices slowed down in growth, but mortgage applications in America also picked up. So we are starting to see a bit of some glimmers of some positive news coming out, but relatively what we're still at a standstill. And we're still looking at things from a negative perspective. So that's where we're seeing all of the markets for now. And to all of you who are joining us, thank you very much. Remember to tag a friend, tag those who you feel that should be joining us, and also give us a call should you feel that you have a topic that we have touched on. Now, Stephanie, today we don't have any deep dives in terms of the news. It was a relatively slow day as we're waiting for the markets as we're waiting for the announcement of the budget, which should be coming up in by the end of next week. And also, it's a very special day. On Thursday, the day before the budget speech, Stephanie, it's a very special day for Money FM. We're turning 5 years old the day before the budget speech. And funny enough, 5 years ago, Money FM was launched the day of the budget speech. So it is a 5-year anniversary for Money FM coming up at this point. Today, however, Stephanie, we're going to be talking about operational efficiency. Unfortunately, we're still not able to get you, but we're also getting that, like I said, unfortunately, some interference coming through the sound. So today we're going to be, it is enterprise. Sorry, you can try that again. Yeah, no, we're still not able to get you, unfortunately, due to the circumstances. But we shall proceed. Today we're going to be talking a lot about operational efficiency, and a question I'm going to throw out at the audience is, have you, and if you are an entrepreneur, this is your question to answer, have you established operational efficiency in your business? Have you established operational efficiency in your business? And this is a question that we would like as many people to answer through the calls, through the text at any point. But this is a question that for all the entrepreneurs, have you gotten to the point where you are now operating at an efficient level? And this is an important thing because there has been a general journey that we've been utilizing on our data. I mean, on our enterprise Thursday. And the reason is, if you look at this has been our model. It's called the business ladder. And the business ladder gives us a picture of the journey from start to end. This has kind of been what we've been trying to use even for ourselves. It's kind of what we're trying to point out for others, that this is the journey that we kind of mapped out for ourselves to go all the way from the bottom to the top. And we've been dealing with this bottom part, the first cube, which is called stage 1A. This is your core task. What is your core business activity? And this is establishing a minimum viable product, coming up with a basic product that answers a problem in society. And by this point, you should have done quite a bit of work. We talked about also making sure that your product is compliant with the minimum compliance standards in your operating environment, whether it's your country, your market, your state, your province, whatever it is, and then making that first sale. So in other words, being able to make that sales pitch and then creating a cash flow. So this is your core task. Being able to create a product, comply with society, make a sale, and create a cash flow. In other words, trying to get someone to buy regularly. So make a sale, then make regular sales so that you've got cash flow. At this point, you are mainly self-employed. You're alone, and at this point you're learning and you're building, and you're getting a lot of your mentality is to get from the industry rather than to give to the industry. Well, now we're graduating into stage 1B, where we're now talking about the operational logistics of your business. And the three main topics you have to look at is one, creating operational efficiency; two, creating product market fit; and three, creating a business model. So these are kind of the journeys that you need to look at before we start going. Everyone always rushes, Stephanie, into growing revenue, making profits, becoming sustainable. But before, you have to establish these baselines. You have to establish the baseline of creating a minimum viable product, being operationally efficient, and creating a product that fits the market and a business model that can operate in. Then from there, you can sustainably grow your business, make profit, and create sustainability. Then you can look at full differentiation, relationships, making peak orders, creating efficiency. Then you can look at brand building, making an impact, creating transformation. Then you can look at building a business legacy and being a permanent fixture in your industry. Everybody looks at the top. Now, I always say this top part is your vision. So you must have it at the beginning, what your vision is, because it'll form the basis of this. But your actions are going to be here, these baselines 1A and 1B. And this is kind of the ladder that we kind of have put together to say, this is the journey that we're all going to have to take. And what perspective do you have to have? You can be task oriented, logistics oriented, tactical, strategic, policy, philosophy. What natural structure should you be? Self-employed, a business owner, an entrepreneur. There is a difference between a business owner and an entrepreneur. These are questions we need to look at. And what relationship should you have with the market? Are you getting from the market, or are you giving to the market? So this is the mentality. There is a kind of a structural map, a roadmap. After years and years of businesses being started and people moving through journeys, it's kind of the map that we've kind of drawn for ourselves to try and go all the way through. Now, let's at this point, Stephanie, and today we're going to talk about operational efficiency. At this point, you should have established founder market fit. In other words, are you a fit for the industry you are operating in? That's the main thing. Remember, there's the four things of founder market fit. You are obsessed. You have a personal story with it. You have experience, and you have the social personality for your industry. Those are some of the four factors that actually help with finding founder market fit. Problem solution fit is where now you're actually trying to remember. There's the problem solution fit matrix exercise where you can break down now how to define a problem and how to then start working to creating a sustainable solution for it. And then the third part, Stephanie, is once you've solved a problem and created a basic solution. Remember, I always say, people, a business is a problem solved with a product built with a process deployed by people. That is a thing you always have to remember. is that you need team vision fit, a starting team. Which starting team are you going to run with who are there, who believe in your vision, and they must believe and buy into your vision for you to be able to get started. So by this point, when you're trying to become operationally efficient, you must have established that you are a fit for the market. You must have found a solution, a solution that fits the problem, and you must have found a team that fits your vision. So this is kind of where you should be. Now you're still to establish product market fit, business model industry fit, and brand culture fit. These are all now going up the ladder as to where you should actually now get those, where you should now establish those. Now, in terms of operational efficiency, what is operational efficiency? Well, operational efficiency is primarily a metric that is used a metric that measures the efficiency of profit earned as a function of operating costs. So, how much are you able to generate profit per operating cost? So that's a very important point you need to look at. The greater the operational efficiency, the more profitable the business can be. So this is what affects your profitability. And this is why before you rush to take on too many customers, this is why people who scale too fast, Stephanie, sometimes this is what they get wrong. In fact, quite a number of times, this is what they get wrong. In fact, people who take out huge loans, I often venture to say, before you even take out a loan to grow your business, have you established basic operational efficiency or a path to operational efficiency? Or is that loan going to improve your operational efficiency? So you need to have already established a market in the industry. Now, at this point, you're also trying to, in order to understand operational efficiency, you have to remember that it's basically when you are able to produce at a much lower cost, but still produce a higher perceived value in order to obtain a high price. So what you want is higher price, but low cost. So are you able to do that? That means you're operationally efficient. Are you able to run a media company from a small house as opposed to a giant station because you've now leveraged technology? Are you able to run a media enterprise through a stream of podcasts because you've now established operational efficiency? Are you able to leverage certain tools to bring down your monthly operations costs while still delivering the same perceived value? That is a question you need to start asking. In nearly all cases, operational efficiency can also be improved by economies of scale. Operational efficient markets, now this is what you have to remember, it's a byproduct of competition. So usually, Stephanie, what leads a person to become operationally efficient is that they now understand that they're operating against competitors. So the best way to defeat your competitors is to be more efficient than them, and that requires you to have a better supply chain than them. So whenever you're trying to build a business, you have to remember the question is, how am I going to produce a greater profit than my competitors per kwacha? So per unit of cost I'm taking on, can I be more profitable? And as I scale, can I improve this profitability? So the purpose of growth is also to make sure that you have enough leverage with your suppliers to improve your profitability. Now, this is also influenced by regulators who cap prices to protect consumers against exorbitant pricing. So also this is what happens. But really, the number one driver of operational efficiency, this is why whenever I'm having the conversation about inflation, Stephanie, I always try and push the direction of saying we need to establish a more efficient and more competitive industry. Industries must be more competitive. In fact, excessive inflation to me, Stephanie, speaks to poor competition in an industry. That's what it should signal to anyone. Excessive inflation often speaks to poor industry competition. So when you see the price of things going up too fast, it's often a sign that that industry is lopsided in its competition, because competitors, Stephanie, always look to get customers from each other. So if we're selling mini-meal and the prices are too high, and if the profit margins are wide, then somebody should be able to sneak in a bit cheaper, okay, and then steal the market from them. That is what a competitive industry should be. And we should be able to take each other out with lower prices by bringing down our operational costs, by being more operationally efficient. Now, there is a debate about efficiency and productivity. So I also want to quickly measure these two so that you understand, because a lot of people tend to use productivity and efficiency interchangeably, but they're not. Okay, so remember, right now we're talking about being operationally efficient because efficient has to come before highly productive. You need to start working as you've created a product. How do I produce it more efficiently before I scale it? Because if you scale a mess, you will grow a problem. That is one of the issues you need to understand. You will grow a problem. You're trying to avoid growing a problem. Okay, so that's why I wanted to make everyone understand that when we're dealing with operational efficiency, you want to make sure that you're not growing a problem. Okay, now operational now efficient productivity basically measures over a period of time how much output can you have. Okay, that's what productivity is. Now efficiency is per cost you utilize, how much can you produce. So the more you can produce per cost. So in other words, let's look at rent. All right. If a company can produce the same amount of products with a smaller and cheaper space, while the other company is also producing the same amount of products with a smaller and cheaper space, you may find, or let me put it so, you may find that while company B has got a bigger space, they might produce more. Company B is more productive per month, but company A is more efficient because they can produce a more per unit of space, while company A may be producing more per unit of time. So it depends on whether you're measuring time or space. Now, productivity versus efficiency is also an analysis of economies of scale. Entities can seek to optimize their production levels in order to achieve efficient scale. So when you get bigger, Stephanie, you're trying to bring the costs per unit down. So that's one of the things, because you're also trying to buy more in bulk. You're also trying to get business discount services. You're also trying to leverage your size as a buyer on the market of inputs. You're also trying to leverage your sales as well. Your size may have brought you some brand recognition, so therefore you can try and push some of the costs. You can push some of your prices up. But you want to improve both. But the first thing, Stephanie, you want to work on is efficiency. And so everyone who's watching, that's the main thing you want to focus on, being more efficient. Okay, that is the first thing you really want to focus on, is being more efficient. Now, doing this, you want to try and make sure that you're not wasting resources as you are growing. So once a company is efficient, then the organization can take steps to become more productive. So you always first work on being efficient before you increase your productivity in the period of time. So before you take on loans to scale your business, the question is: are you producing bottles of juice, chikanda, or food, or dresses, or whatever? Are you producing them in an efficient manner? If you're producing things efficiently, then you can scale them. With this strategy, efforts to increase productivity become more fruitful because these are built on a baseline of operations that are highly efficient. So you always want to make sure that you're not growing a headache. And this is the problem that a lot of people make. Do not grow a headache. Grow your profits. Okay, so anyone who's watching that, you may want to write that down. Be careful of growing a headache by growing a business that is not got efficient operations. Now, unit economics is an important thing as well to understand. And this is quite important because most people don't know this. Unit economics ends up becoming important because you need to get your unit economics right before you end up growing a problem instead of growing your profit. So you need to know, one, what is the cost of getting a new customer? Now, cost of getting a new customer is often established. We call those customer acquisition costs. Your customer acquisition costs are a function in your business of they're a function of your costs of new advertising, specials you give out, everything divided by the number of new customers that you're getting. So you have to track your business and look at what is the cost of getting a new customer. Now that has to be less than the lifetime value of that customer, and that lifetime value is often the customer lifetime value is your lifetime value of that customer times the margin. And then the lifetime value is the average value of sales. So let's say you get somebody, Stephanie, who's buying dresses from you. Okay. And you say, how much does this person spend per month? How many times do they buy a dress from me per month? And then how long do I usually keep customers before they leave me? Okay. Because then you are the regular supplier to this person. If you're selling dresses, if you're a barber, whatever it is, you've got to establish this number of what's the average transaction value this person has, what's the number of transactions in a period of time, and what is the average retention rate over a period of years. In other words, what percentage of my customers leave me? One minus what is the percentage of my customers that leave me? That's the lifetime value. Then you look at the profit margin per sale that you make, and that is your customer lifetime value versus your customer acquisition cost. So what does it cost you to get a new customer? Should be no bigger than 1/3 actually of what it costs you in optimal standing. It should no bigger than 1/3 of what it costs you to of what you gain from that customer over the lifetime of it. Then when you've gotten the harmony of that number, that's when you can say, now it's time to grow our operations. So when you've gotten this number and you can rapidly, that's when you can now say, now I can get loan capital because I've worked out how to market. Damon John often says, if you do not work out how you get new customers, what's going to happen when you get capital from somebody is you're going to start throwing it into a pit consistently. And then you're going to lose a lot of money. And now you've got debt to pay without any increased sales. So that's kind of what you need to do. By the time you're getting to operational efficiency, Stephanie, one of the things you're trying to look for is you're trying to also manage the risks that you have dealt with. I remember yesterday we talked about risk. So there's business risk. This comes from creating a product, and you need to be able to now. This is whether a product can make sufficient sales to cover its operational costs and turn a profit. So you have to look at the cost of the goods that you're trying to sell, the profit margins that they have, your competition, and is this a growing industry? Okay, you have to look at the industry growth levels or the industry growth opportunities. The other thing, Stephanie, you also have to look at is your operational risk, because we're talking about operational efficiency. So are you having system failures in your production? Are you having errors? Are you having fraud? Are your internal processes in question? So this is where you need to look at, what is my internal process of production? How am I capturing my cash flows? Do I have an accounting system? Am I flowing money through it? Are my processes correct? Are my systems correct? These are the questions we need to start answering when building our businesses. And then also look at laws. Remember, you need to be compliant. Are you in line with regulation? Are you handling disputes properly? So these are the risks you need to manage and mitigate in the efforts to try and build out from here. Now, I would go through some of these other more softer issues when it comes to this, but I think we'll kind of leave this here for now, Stephanie. And this has been our conversation on developing operational efficiency as a business. And this is really on our Climbing the Business Ladder series of Climbing the Business Ladder series. And I really want us to focus primarily on trying to get from the bottom of that ladder all the way to the top. So keep glued in every Thursday. This comes from our business consultancy side, where we're actually trying to work out a number of this. But I'd like to say thank you very much to those of you who have joined us today. Thank you very much for the wonderful day. And Stephanie, hopefully we don't have that sound, but I hope you have had a wonderful day today, Stephanie, and see you tomorrow. Have a good day.